Okay, good morning, good afternoon, good evening, depending on where you are connecting to us from. It's a pleasure having you here. And if you are here live with me, kindly comment in the chat section and let me know where you are connecting to us from as well. I repeat, it's a pleasure having you here. And of course, you already know what we are going to be discussing today. We're going to be talking about the markets. We're going to look into the market for some trading opportunities. We're going to talk about the fundamentals and also the technical analysis, fundamental and also technical analysis, where it will build the foundation for our trading strategy. If you are new to our section, what we do here majorly is price action trading. I repeat, price action trading, right? So as I said, it's a pleasure having you here, right? So let us know where you are connecting to us from. I repeat, price action trading is what we are going to be discussing here, which support resistance, supply demand that will be in the mix to help us with the area of interest, the area where we want to enter the market. Okay, so my name is Tolu. And first of all, I want us to appreciate Trading Live, the Trading Live platform. I want us to appreciate them for connecting us together from different parts of the world to talk about the business, to look at opportunities, and of course, to grow financially in the business of trading. So as you can see over here, here's the platform. So you have other facilitators here where you could get to learn from as well. So you can as well check them out as well. And you can also share the word, share the link, share the information of Trading Live, and let's have more people take advantage of this platform. Great. So with that said, we are just going to quickly switch over to the charts because at the end of the day, everything has to do with the charts, right? And as I was trying to say earlier, my name is Tolu, and I represent my academy, my trading academy, known as CSA Forex. CSA Forex stands for Common Sense Approach to Forex Trading. There must be a common sense approach to anything and everything in life. I'm sure you would agree with that statement. And then in this business, when it comes to common sense approach, you can apply this to any instrument of choice. You can apply this to the Forex, which has to do with the currencies. You can also apply this to the cryptocurrencies, Bitcoin, Litecoin, Ethereum, Ripple, Dash, and the rest. You can also apply this to stocks, commodities, whether you are trading the likes of Tesla, Amazon, Google, Facebook. Just note one thing, that everything, I repeat, everything has to do with what? With price action. Whether you're trading indicators, it is all based on price action. Whether you're trading using tools or you're trading using chart patterns, everything has to do with what? Everything has to do with price action. Price action is king. Price action by definition is the behavior, is the movement, is the direction of price. Another thing you also need to note now is what? Another thing you need to note is a disclaimer. There is always a disclaimer, so I'm going to give you the disclaimer now. Kindly note that trading the financial market carries a high level of risk, right? As it carries a high level of risk, there is the chance, the possibility of having losses, if not even total losses. So you need to ensure that you protect your account accordingly by ensuring that you minimize your losses by using the proper volume, using the proper lot size for your account balance, right? Which is very, very important. This business carries a high level of risk, as we said earlier. It's a leverage business, and the information we're giving you today should be used for educational purposes only and not as a form of signal. I repeat, not as a form of signal. You would need to also understand the risk management that we mentioned now, which is very key, very, very paramount. Another aspect of the business is psychology. You need to understand the psychology of the trading business, which is very, very important at the end of the day. Okay, great, awesome. So now with what we have in front of us, you can see this is the AUD USD, which is the Aussie, popularly known as the Aussie. So for this week, we are discussing the majors and gold. So you need to know your instrument. It's always good to have a trading plan. It's always good to have a trading plan. And in your trading plan, you should know your trading instruments. First of all, in the plan that you have for your trading, it's always good for you to know your instruments. I majorly focus on the majors and gold, right? I also look at Bitcoin as well, but I haven't traded Bitcoin in a while, right? So majorly, my go-to instruments are the majors and gold. The majors and gold, right? You can see this is the Aussie in front of us. This is the Aussie in front of us. And then with this Aussie, as you can see, right, which is dollar-based, that's why it's called a major. All the other instruments here, the cable, dollar-based, Euro USD, dollar-based. So we'll also be focusing on the dollar as well. And this is the dollar in front of us. But first things first, I always like to advise that before we turn to the technicals, we need to check on the fundamentals. I repeat, before we just dive into the technicals, we need to look at the fundamentals, and the fundamentals would be with respect to the news, the calendar. We're going to switch over to the calendar now. I'm going to have an idea what we have coming out today, right? So we should be able to see the calendar in front of us. I repeat, we should be able to see the calendar in front of us now. And this calendar that we have in front of us is gotten from the Forex Factory. That is www.forexfactory.com. And this is a popular, very popular website that gives us news for the day, right? So as you have the news for the day, you could also look at it for the news for the week and so on. But when you look at it for the news for the day, because you are trading or you're looking for trading opportunities today, it is now for you, I repeat, it is now for you to understand the news that we have. Now, first things first, we have already done a filter. This is the filter here. We've done a filter to show only the red, and the red represents the high impact news. The orange represents the medium, yellow is for the low, and then this is non-economic. So we've already highlighted only this red, only the red, and we did apply filter. You could also do all, right? And then it shows you everything. So let's do all first of all. Apply filter, and you can see it shows us all the news for today. Today is what? Today is the 9th of May, Tuesday. And the 9th of May, Tuesday, you can see that we have all the news coming out today. But they are all yellow at the end of the day. They are all yellow at the end of the day, and yellow is low impact. So we are supposed to be focusing on the high impact. So for the high impact news, if we scroll up and go back to the filter, and then we, first of all, let's reduce to none, and we highlight only the red, and then apply. It now shows us only the high impact news. Why are we even focusing on only the high impact news? It is the high impact news that does what? That tends to move the market. That is where you find the most volatility in the market. Before you know it, you'll be used to some certain news out there. You'll be used to some certain news that occur on a regular, on a monthly basis, right? Like last week, Friday, we had the non-farm payroll, which is the key data to the US. Remember, we're trading the majors and gold. And when it comes to the majors and gold, the normal denominator here is the USD, the dollar. So if you look over here, today being Tuesday, right? Let me just do some markers on the chart so you can see exactly what we're talking about. Today being Tuesday, May 9th, we don't have any high impact news today. You can see the hair is clear. No high impact news today, right? So usually when there isn't high impact news, just like yesterday, Monday and Tuesday, usually you expect the market to be rather quiet, right? And that is based on fundamentals. Fundamentals based on scheduled news. You expect the market to be rather quiet, meaning that there is no driving factor, no driving force. But at the same time, you could also have things like the breaking news. You could have a breaking news, or even based on the technicals, it might hit a key area of interest, and then the price could easily react to that area. Who knows? But then, based on what we have in front of us, we don't have any major news that could cause some serious volatility in the market. So tomorrow is the big one. Please pay attention to this since we're talking about the fundamentals first of all. Tomorrow is the big one. When we say the big one, right, by 1:30 p.m. And this is based on the UK time zone. So please, you would need to adjust this forexfactory.com website to your own time zone. You can do that by refreshing, or you can do that by clicking on the time over here and then making the adjustments based on your own time zone. This is very, very important so that you're looking at the exact news for your own time. Because trust me, this CPI, right, the Consumer Price Index is a very, very key indicator. It's a very, very key news, right, for the US dollar, right? And trust me, we always have, I was about to say we never have a dull moment. So we always have some solid volatility in the market that can easily lead to the increment in spread, or that could lead to the what is known as slippage. Slippage is when your penny orders don't trigger at where they're supposed to, but they trigger at another place because of the high volatility in the market at that point in time, right? You could also have some other things. You could have whipsaws where the market tends to, on that same candle, you see it rushing up and the next thing it rushes down and then it's all over the place. And the market could be chaotic during that period. So it's always very important for us to be careful when we have high impact, and this is coming out tomorrow. Well, we said today is Tuesday, and today is pretty light on data. But even though it is pretty light on data, now we need to confirm with the technicals, what are we seeing? What are we observing? Because the technicals is very, very important at the end of the day. I repeat, the technicals is very, very important at the end of the day. So this is what we're going to be doing now based on this technical analysis. I repeat, based on this technical analysis, what we're going to be doing now is this. We are going to be looking at the, what's the name? We're going to be looking at the dollar, first of all, the USD, also known as the DXY on some brokers. And this broker of choice in front of me is one that has been tried and tested. It's known as the IC market, right? So lots of good brokers out there. If you need broker recommendations, do let me know, reach out to me, and I could also shed more light on broker that you can make use of. So if you look at what we have in front of us, here is the dollar, right? And then, of course, we always say price action. That will give us the support, resistance, supply, demand, which happen to be different and also similar at the same time. Now look at what we have over here. We had an area here of, you can call this resistance, supply. At the end of the day, whether you say resistance or supply, as we said, it's really similar, because resistance supply simply means that it's an area where the price went down, right? Resistance down, supply down. You can see the price has gotten back to this area of resistance or supply, and now it is looking quite all right, like it wants to break out to the upside. But who knows? Will it break out to the upside, or could it just easily be a fake out, right? So we need to pay attention to what's happening over here on the dollar. Why are we even paying attention to the dollar? Because it is the dollar that is going to help us to gauge and then to understand what is happening based on the majors and gold. And you're going to see for yourself now. So where the price is now, you could look for, because price has gotten to this area of interest where we are looking for selling opportunities. We're looking forward to sell in this area here. So as we're looking for selling opportunities, you could either have maybe a sort of chart pattern. You could have a chart pattern, whether it's head and shoulders, or it is double top, or it is it's sort of wedge, whether it is a flag or triangle, whatever it is. There are lots of chart patterns out there that when you get conversant to them, it can help to lead to your entry. Then apart from chart patterns, you also have the price action patterns as well. Price action patterns, which happens to be the likes of, you might have heard of them before, the likes of the engulfings, in this case, bearish engulfing, because we're looking forward to selling over here where it is now, bearish engulfing. You could also have the likes of the bearish pin bar or the bearish hammer, right? There are other candlestick patterns as well, but the rest are not as strong as the ones that we just mentioned now, the hammer, the pin bar, and the engulfings, right? As a matter of fact, I know a lot of traders that focus strictly on the engulfings, because the engulfing shows strength with respect to the buyers or strength with respect to the sellers, either of them, right? Which is very, very important to take note of. So once you have this here, this will be your trigger. But then I also want to tell you something based on this dollar. Based on the dollar, for this week, for this new week, right? Because today is the second day of the new week, right? Which is Tuesday. For this new week, we've had the market push higher, right? We've had the market push higher, meaning that the trend, because you're meant to be following the trend as well. You can see the overall trend. The overall trend on this particular chart is what is more or less sideways. This is the hourly time frame. I'm a big fan of the hourly time frame. It's not too fast and it's not too slow. Right? Some of us that might have been following our sessions here on that Trading Live, you probably must have observed that as well, that I strictly use 1 hour time frame. You could drop down in time frame to fine-tune your entries, and you could also do what? You could also do some other things as well. You could also go higher in time frames. When you go higher in time frames, it's going to help you with respect to having a bigger picture, understanding your charts from a bigger time frame perspective at the end of the day, right? So with that said, if you look at what we now have, you can see prices still trying to push higher, but do not be in a hurry to conclude. It's always best to wait for the candle to close based on the time frame, the 1 hour time frame. Also note that the time frame would also determine the type of trader that you are. I repeat, the time frame would also determine the type of trader that you are. If you are what's the name? If you are a scalper will most likely be using like the 1 minute, 5 or 15 minutes time frame. And then if you are a day trader, you could easily be using maybe the 15 minutes, 30 minutes, 1 hour, and all. Right? Just trying to give you a rough idea based on the type of trader that are available, and also the time frames are also tally with them as well, which is very, very important if you ask me. I repeat, if you ask me, very, very important. You could also do multi-time frame analysis approach. There are different ways to use the time frames as well, but I always say try not to make it to be confusing for you. Now, look at what's happening over here. You can see it is looking like it is pushing above here. Remember, we said we need to wait for the candle to close to give us more idea of what's happening. And if this candle, let me clean this off first of all. If this candle and next candle, if they breach out in this manner, meaning that they have neglected this area, right? This area of supply, then I'll be looking forward to price coming here because it shows that the buyers for this week are getting stronger on the dollar. And then I'll expect the market to come back, do like a parabolic move to this area here, right? And then push back higher. So for me to enter as a buyer, this will be the area that I will be interested in. And then over here, I'll just be looking out for my price action, right? I'm looking out for my price action, candlestick patterns, or my chart patterns, or whatever you are going to use as your trigger over here. So we are going to use your trigger over here. That's what you're going to be looking out for. I'll give you an entry here, and then you push higher based on the dollar, right? Remember, we're talking about the dollar. And you can see as we are focusing majorly on the dollar, it's going to easily help us understand what's happening on the majors and also based on gold as well. It's going to help us understand what's happening on the majors and also gold as well. So if you look at what we have over here, right? This is the dollar. So we're looking at it either in these two ways. Either it will be a thing of you're looking for sell opportunities where it is, right? You're looking for sell opportunities over here based on this, or you're looking for the price to come back to this point here and then you buy to take it up based on this demand area here, right? So don't forget, this is the hourly time frame. This same price action concept using support, resistance, supply, demand, it works on all time frames. I repeat, there is no strategy. Let me put it this way. There is no strategy that doesn't work on any time frame. The only thing you need to focus on now is that some strategies, right? Some strategies based on the time frame that is might not work as much as on another time frame. As an example, scalping, you might be using scalping at a time zone of on a scalping. You can be using scalping, right? Trading scalping, and then you're not paying attention to the news. The news is what could easily cause some volatility. And as a scalper, you're not using stop loss. Scalpers don't have time to be putting like 10 pip stop loss or 5 pip stop loss because even the take profit they're going for is small. So they tend to monitor their trades, right? But you cannot be trading as a scalper and you're not paying attention to the news. So you could get caught in the mix with respect to the news. You could easily lead to losses. So based on the time frame, there's just some little things that you need to pay attention to, right? And of course, the lower the time frame, the lower the stop loss. And of course, the higher the time frame, the higher the take profit as well. What I just said now might give you an idea meaning that you could easily mix the two of them together. Yes, there's a way that you can combine the two of what we just mentioned, where you're having a very small risk with small stop loss for a high take profit reward at the end of the day. So this is the dollar for you. Now, when it comes to the dollar, right, and then we look at the first instrument that we have here, which is the Euro USD. You notice that the Euro USD is more or less the opposite. It looks very much opposite to the dollar, directly to the dollar. Remember, we said the dollar is for all the majors and gold, but this Euro USD tends to look very much similar. Like I see the Euro USD now is at the area of demand, right? This is an area of demand where you like to buy to take it up, right? And then this is the area of what? The area of supply where you like to enter to sell back to this place. It's always good whenever you cross over to your chart and then you map out your areas of interest. Whenever you map out your areas of interest with respect to your support, resistance, supply, demand, your area of interest could be anything, by the way. It could even be the moving averages system that you're using. It could be your Bollinger Bands that you're using. It could be Fibonacci that you're using. Whatever you are using, the area of interest basically is where you are interested in entry. That's the area of interest. If you look at what we have in front of us, we have the area of interest for buyers and then the area of interest for selling. So you need to have that, your trigger, that would help you to determine whether it's going to be a buy or it's going to be a sell. Remember, we said the Euro USD looks pretty much similar to the dollar. And then I would also give you a clue, because correlations is something that is very, very important over here as well. You can easily use correlations for your trading. And we're talking about correlations. Euro USD, you can see here you're looking forward to a buy where it is, and looking forward to a sell here. This is pretty much in the opposite direction to the dollar Swiss. This is the dollar Swiss here. In as much as the dollar Swiss has not gotten to this area here, because this is the area of interest for selling. Remember, the Euro USD is at the area of buying, but this dollar Swiss, this Swiss is not yet there. But then at the same time, it could easily still push higher and then drop. So you can see that this is similar as well, because we also have this similar demand here, which happens to be supply on the Euro USD. So basically, the Euro USD and the dollar Swiss, they tend to move in the opposite direction. So you can use this as a form of correlations. Correlations are usually good, and you can use them to your advantage. When it comes to the Aussie, the AUD USD, and the Kiwi, they tend to also move pretty much alike as well. The AUD USD and the NZD USD, they tend to move pretty much alike. And then you could use that also as a form of confluence as well. You can use that to take advantage of. If you notice that the AUD USD starts to move, expect the NZD USD most likely to follow suit. I repeat, I expect the NZD USD most likely to follow suit at the end of the day, right? So that's another one. And then the cable too, you could say it's pretty similar to the Euro USD, but I've noticed that they could easily differ as well a lot. So this is the Euro USD still in the area of buying, and you can see, and this is because the dollar is still in the area of selling, even though it looks like it's trying to breach it. This could easily, on this DXY, on this index, it could easily look like a fake out, a false break. That's another thing that traders need to be careful with. But as it's behaving the way it is, it could be telling you, oh, it is trying to go up, it's time to push higher. Then some people just place trades based on the pure breakout. I repeat, traders place trades based on the pure breakout. You don't do that based on the pure breakout. Why? Because it could easily be a fake out, right? And that's what normally happens to traders. They get faked out and then they end up losing unnecessarily because they did not exercise that much needed patience to have a clean breakout. And remember, we said the time frame is also key. Wait for that wait for that candle time frame to close. So this is the cable we just mentioned here. You can see you're looking forward to buying here and then selling here. One thing I would also advise traders now is to see how you can trap TRAP. Let me write it down for you. How you can trap. I hope my accent is also good. How you can trap TRAP. How you can trap price. When we say trap price, we are trying to put price in a box with respect to the buying and selling areas, with respect to the support, resistance, or supply and demand. You're trying to trap price. So you're trying to trap price. This is the area that you want to buy. and then this is the area that you want to sell, right? I repeat, this is the area that you want to buy, and this is the area that you would like to what? You would like to sell at the end of the day. So it is for you to have that directional bias that which one do you think should be for this week, right? There are different things you could use as well to have a gauge. You could even cross over to a higher time frame to have a better understanding or maybe the major trend or whatever the case might be. But I always advise to see how you can trap price, and that will give you your area of interest for buying and then your area of interest for selling as well, right? Very, very key, very, very important at the end of the day. So this is what we have here for the cable. So watch out for this one and look for opportunities in the market. Look for opportunities in the market. Don't forget, as a disclaimer, this is not to be used as a form of signals, but rather for educational purposes only. I repeat, for educational purposes only. So with what we have in front of us now, I repeat, with what we have in front of us now, we are going to cross over to the dollar yen. You can see we're moving from the dollar all the way from the euro USD, pound USD, Aussie and Kiwi, and so on. We're breezing through the major currency pairs and then gold. We could even add Bitcoin to the mix, because Bitcoin also has the dollar in it. So this is the dollar yen. Look at the dollar yen. It seems to be sitting on this area of what? You can see it's sitting because it keeps on bouncing from this area. So this has been an area of demand, as you can see. And then we have this area here as an area of what? As an area of supply. So the price could easily push here. And then this is where you start to look for areas of, you start to look for trigger at this area of interest. Your trigger could be a bearish because you want to sell here. It has to be something that is bearish. It could be bearish engulfing, bearish pin bar, bearish hammer, whatever the case might be. You look for the selling here and then take it back down. You can see these ones have already been acting as demand. And as I said, you try to trap price. And if the price should break out of here, then probably it could use this area as a launching pad and then to push higher the more, right? So don't forget, price trap is very key. And we also have some other levels above, right? Above and even below, like on this dollar here, we have some other levels like something around here as a form of resistance for selling. Even below, we have something here as well as a form of demand. But you notice that we're not drawing all of them. If not, it starts to look too messy. You have too many drawings, too many levels on your chart. And before you know it, it is not as clean as you would have loved it to be, right? So one thing I always try to do is to make the charts as clean as possible and not put too many levels there. It also helps for your eye so that you can properly analyze the situation when the price gets there, right? So that you can analyze the situation when the price gets there at the end of the day, right? Okay, so from what we have over here, this is the dollar yen. Let's just clean this up. And if you have any questions, feel free to ask. And if no questions, no problem. You can watch this on a replay. The replay will be finding it on Trading Live platform. And you'd also find it streaming. It's streaming now live on the YouTube. YouTube channel is known as the CSA Forex. You can find the YouTube channel CSA Forex. And I'm also on Instagram at CSA Forex. C for cat, S for snake, A for ant. That is the CSA, and then Forex, Forex. You can't miss me. You see my picture there as well. So based on that, right? Based on that, let's move on to the dollar card. The dollar card had a crazy move last week, especially based on last week's FOMC. We had the key data. That's why we always say check the calendar first of all. Last week we had the key data of the FOMC, and then also coupled with the Friday's NFP. The FOMC was on Friday, right? NFP was on Friday, and the FOMC was on Wednesday. So we had key data. We had key data for the dollar and the card last week. So looking at what we have over here, you could easily look at this as a form of launching pad for buying to push higher. And you could also look at this as a form of resistance. You can see here resistance supply areas over here. You can also look to the left-hand side, and then you see like similar areas of interest here as well. So from what we have here, you could also have a selling opportunity here. But don't forget, guys, as we're talking about these guys individually, I always relate them back to the dollar, the USD. I always relate them back to the dollar. And you can look at the dollar index, right? right? So when we talk about the dollar, talking about the dollar index that could give us more clues with respect to the majors and gold. So as giving us more clues, also know that it is not all of them that will react the same way. They also have another currency in the mix as well. It is one currency against another currency, right? So this is the USD card for you, right? The USD card, and we're going to ensure that we don't take much of our time, that we can finish on time. The market is open now. I'm presently watching a few charts, as you can see in front of you. I'm watching these majors, and I'll definitely update them based on the happenings against tomorrow. So that means that when you join us for tomorrow's session, right, we will be able to explain all of this the more based on our analysis from yesterday. But what we're trying to do is to use the before or the during, to get our after. So we do a before the entry, during the entry, and even after to see, based on analysis, did it work, didn't it work, and so on, whatever the case might be. Don't forget, another one is that there is no trading strategy that is 100%. You will, it's not a course, it is part of the business. Including myself, we will have losses. We must ensure that your losses are well minimized, very small, where you ensure that your risk management, your reward is greater than your risk. So you must always be looking for a risk. You must always be looking for a reward that is greater than the risk. Very, very key, very, very important. Okay, so with that said, let's clear this up. And I want to show you gold. Now, the thing with gold now, also pay attention to gold. Gold with respect to the dollar. This dollar here, you can see, is trying to push higher, and where it is. When the gold is trying to push higher, when the dollar is trying to push higher, expect gold to be doing the opposite, right? So you can see from the gold over here, we have this area here of interest, right? Which looks more like a demand here, where the price will easily come back to this point and then push higher, right? So if this is going to push higher, it is because of the dollar pushing lower at that area of interest. I repeat, if it's going to push higher here, it's because the dollar is going to be dropping at that supply area, at that supply zone. Very key, very, very important, right? And this is another area here, another area of supply, right? Another area here of supply where you're looking forward to selling. And here is an area of demand where you're looking forward to buying, right? So pay attention to the dollar, very key, very, very important. Most times, whenever the market starts at the very beginning, I'm saying most times, not all the time, most times the market starts off slow, and it also tries to confuse traders with respect to directional bias. You might think it is going up, and then the next moment it switches and then it's going down, right? And that's at the very beginning. So you need more information that will give you that clarity. And some other times at the start of the market open, it just rushes and then tips its hand as to the directional bias. As I said, most times the market could be doing some daily dally, some zigzag movements for like Monday, Tuesday, thereabout. And for some brokers, the market opens on Sunday, but Sunday there's no true liquidity on Sundays. The banks are not able to open on Sundays as well. So you might need to wait for the market properly on Monday for better activities. And when it comes to like the Sydney, Tokyo, London, and New York sessions, the most active, the most volatile sessions happen to be London and New York. I repeat, they happen to be London and New York session. Very key, very, very important for us to take note of. So this is gold over here. And when we say gold tends to move in the opposite direction to the dollar, right? And then let us quickly talk about the Bitcoin here. And if you notice, we'll be looking at all of these guys from the lower time frame, which is the hourly time frame, because I like looking at the hourly time frame a lot. It's not too fast, it's not too slow. The hourly time frame is that each candle you can see here, each candle, right, is lasting for 1 hour. I repeat, each candle is lasting for 1 hour. And that's a very good one. I repeat, that's a very good one for our analysis at the end of the day, right? Very good one. You could either use the 1 hour time frame either as an intraday trader, or a swing trader. Truth be told, there's a way you can also combine it for scalping. Maybe you start from the hourly time frame and it gives you that directional bias. You cross over to the 5-minute time frame for scalping, and then you are trading strictly based on that on that direction. right? So there are different ways to use this time frame to your advantage, right? Don't forget, guys, the time frame that we have been talking about, we find them over here, right? From the 1 minute, 5 minutes, 15 minutes, 30 minutes, 1 hour, 4 hours, daily, weekly, and monthly, right? Like let's say like the daily, weekly, monthly, the higher time frames majorly is where you find the likes of the position traders like Warren Buffett and the rest of them that could, get into a particular instrument and then they're holding it for months or even for years, right? This is how some traders also do, but most people that you ask, most of them might say they are scalping or they are swing trading, or maybe even intraday traders, either of those three. I normally advise if you are new, if you're watching this on the replay, please watch and listen to this part very carefully. If you are new, please do not rush to be a scalper. That is one of the issues that a lot of traders have had, including myself when I started, because we're all looking for fast money. They're looking for fast money. You wanted to be scalping so they get opportunities very fast, make money very fast, everything very fast. But the only thing that was happening very fast was what? You guessed right. The only thing that was happening very fast was us losing money very fast, right? And then we had to, go back to the drawing board and make some adjustments. And of course, we know much better now. So if you are new to the business, once again, to help you so that you don't waste all the months or years that some of us had wasted learning this business, please do not be a scalper at the very beginning. You start as an intraday or swing trader. Intraday or swing, very key, very, very important. If you want more information on that, you can reach out to me. You can chat me up via the Trading Live platform. You can chat me up via Instagram at CSA Forex. You can also, don't forget, you can connect to the YouTube channel, subscribe to the YouTube channel, and also watch the videos, watch the lives, watch the recordings, the short recordings there that gives us tips and tricks, how to set price alerts, how to use moving average, how different ways to draw support and resistance, and so on. So you can get more information from there as well, right? So this is the Bitcoin from what we have here. And if you notice also, we've been looking at this from the hourly time frame, more or less the intraday stroke swing time frame. What about the higher time frame? The higher time frame, like the daily. This is the Bitcoin on the daily time frame. You can see I have it mapped out here. My map is already here. This is an area of demand, as we've been seeing over here. What's going to happen here? Then this is the chart pattern that I'm watching as well. It is a triangle, a wedge that has been broken out now. And if you are cognizant with these patterns, you could easily push higher back to this area, this broken trend line, right? And act as a form of resistance and then drop down. And then as it drops down, this area is very important, as you can see, a demand area. That means that the demand area could easily walk and push higher for the Bitcoin, or you could break, right? Break, retest, and use now as selling to drop down to this area of interest. Right, we're talking about areas of interest, and we could also say, look to your left hand. Everything is still price action, which gives us the support resistance and gives us the supply demand at the end of the day. Looking over to your left hand side, you see that 25K is also a possibility on the Bitcoin. So there are different ways to trade. You just need to understand how to look at the market and try your possible best not to confuse yourself. I repeat, try your possible best not to confuse yourself at the end of the day. All right? So this is what we have right in front of us. So I'm going to be wrapping up now, as we always try our best. We try not to take way too much of our time. We talk about the instruments. It will easily help you to have a better understanding of what to look out for the day or for the week. And then you also get to learn some like tips and tricks as well. Like I would always tell traders that when you have a vertical move like this, when you have a vertical move either to the downside or to the upside, it's always very important for you to not rush in, wait for more clues, especially based on the area of interest that will give you that information, whether that level is going to hold or not, right? So I want to say thank you guys for joining me. What we have been talking about today has been the majors, right? The majors and gold. I repeat, we've been talking about the majors, right? The majors and also gold. We've also looked at the Bitcoin, which happens to be the BTC, the Bitcoin, right? You can just use the BTC as an example. So looking at this also, we've talked about some areas of interest on them and what to expect, like this one in front of us, EURUSD. This could easily hold and push higher and then you could use this area as an area of interest to sell, whatever the case may be on any instrument. Also consult with your dollar, also consult with your dollar index, your DXY, and also consult with the news, the calendar for the day. Very key, very important. With that said, I want to say thank you guys. And if anybody has any question, you can always reach out to me. I mentioned the platforms where you can reach out earlier. You can reach out to me, ask your question, and then we'll see what we can do for you. So thank you guys for joining us. Thank you, thank you, thank you. That's indeed been a good one. And we want to say trade safely, ensure to use your stop loss, ensure your stop loss is on your charts, not your mental stop loss. Mental stop loss is when you tell yourself this is where your stop loss would be, but you don't put it on the chart. So make sure you have your physical stop loss, make sure it's on the chart, and then also ensure to use the proper risk management. Use the proper risk management at the end of the day, which is your volume, your lot size, based on your account balance. Okay, so thank you guys for joining us. Thank you for joining me, Tolu of CSA Forex. And thank you for the platform Trading Live for being able to connect to many other traders as well. So thank you guys. Enjoy the rest of the day and goodbye for now. Cheers.